Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We got a whipsaw session here, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yeah, what a whipsaw today here, and CPI was in line to slightly soft. You would expect the markets to kind of keep bid. Going back a few months, we've seen these reversals off of really what could have been or would have been imagined as a supportive inflation number, and we've seen reversals previously. Today, you wouldn't have thought that would have happened. If you thought maybe more of a pent-up trade that was ready to kind of move higher. We got that early. Overall, it was everything in line, but the headline year-over-year CPI at 4.9% was better than the 5.0 that expected. It was the best number going all the way back to, I think, early 2021, December 2021, I think it was. Overall, though, you got the response in the market. The S&P traded up to 41.70 before reversing a bit from there, and then the selling really started to kick in here from the about an hour and after the open. We are setting new session lows right now, chewing through that support of 41.24, 41.28. We do have some additional levels below there. And then as for the NASDAQ, you got this move out above 13,400. It's still trying to battle unchanged on the session and holding green territory, but it's surrendered all of that and as well has reversed lower. It's one of those whipsaw sessions. Can we hold and can we see this market hold against support? This is really what the Fed wants to see. The Fed wants to see slowing inflation, and then the May number is expected to be even slower. So even when you look at it, energy added about almost 60 basis points to the inflation number after energy surged last month, but which is a lot different than its typical almost 1.25% drop of 1.25% towards the CPI number. So it tells you the rest of the number was very favorable. So that's all you really have to know. But the markets don't seem to care right now, and you were starting to see this selling. Now, the Dow has been red for a lot of the session, so you know that is where we're looking at it. Maybe it's the recession fears, and maybe as well those odds that the Fed could hike again in June still may not be high enough right now. So the market's working through digesting this, but really what matters here is if the market can hold against support. All those are highlighted at the Morning Express. Moving on to crude oil, the EIA number this morning, I don't see it as bearish. I really see that as maybe not bullish, but something that could keep this market consolidating very healthy in what we've seen recently here. But you do have rare major 4-star resistance overhead, $73.50 to $74. However, key support has held in this market, and that's been very important here through the week as it's been developing, and that's all highlighted in the Morning Express. But you have a build in crude oil, surprise build in crude oil of over 2 million barrels. However, the products of a draw of over 5 million barrels, right around that number, weaker than expected refinery utilization again for another month, another week in a row. And that really kind of tells you right there they're pulling crude in order to create the products, and it's just not meeting the expectations right now. You have over 2 million barrels of SPR released, and the net imports, which include the SPR, of another 7 million barrels of net imports change, and that over the week span can really make that big difference in what we're seeing there on these numbers. So that's quite the impact. That explains it, and that's why I think these numbers not bearish, but construction against support is really what matters here, even though the market has traded higher, just hitting that resistance right now. And if you see the rest of the S&P and the equity market start to roll over a bit, it's going to weigh on risk assets. However, gold and silver are ticking off session lows as the equity market is making new lows right now. The gold and silver did surge, though, right after that CPI number. Gold got into 2050s, silver got to 26.20, and then they reversed sharply as the session unfolded. So a very wonky, whipsaw session right now. Gold is battling out in front of a support 2024, 2028, which aligns with unchanged on the session. We've seen a response to that level. Silver does have some support at 25.5, but it is below a bigger level around 25.70. You want to see it get back above there as the day unfolds. Copper as well, just continue to kind of bleed lower on the session. 384 area is a level that we've seen the prices respond multiple times over the past couple of weeks, and can they do that again? I think there's just a lot of fear of recession right now as it's out there. And I wrote about that yesterday. Where is the recession? We're not getting it. So I just think the market is just sort of just working through things and staying in the consolidation range. If you're buying breakouts, you're not going to perform. I mean, so resistances are holding, and so far supports have held too. We'll have to see how the day sets up. Our team is here to help, so don't hesitate to reach out to us. 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.